Hello, everyone. Welcome to the final bar. Today, we're going to talk about a market that continues to push higher. As we talked about for a lot recently, right? In recent weeks, this unrelenting uptrend with this lack of breadth, with a lack of participation. But today, more about a follow through, right? You had mid caps and small caps finishing strong. The S&P still leading the way. So the mega cap trade is alive and well, but there are a lot of other parts of the market that are participating as of this moment. What does that mean for the overall breadth characteristics? Where should we be looking for opportunities? We'll look at all of that and more. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller, Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us every weekday after the close to break down the market activity from a technical, behavioral, quantitative perspective, try to make sense of the patterns that we're seeing, hopefully get you on the right side of these trends and anticipate inflection points the best we can. And most importantly, connect the short term of what we're seeing today with the long-term trends. And as we've been talking about, I think, I talk with a lot of my peers and really my mentors who have been doing this a lot longer than I have. And, if I could summarize my conversation in one comment, it's we're due for a pullback in many ways, whether it's we're reaching upside objectives of 3,500 to 3,600 on the S&P, whether it's the extreme overbought conditions, whether it's the lack of breadth, the lack of participation, the lack of confirmation from small caps. We are essentially following the bull market topping playbook, except for that really important part where the market actually goes down. Today I was looking at the chart of Apple earlier, and it's a bearish engulfing pattern, or at least it was earlier. We'll look at that in a minute, but starts to think, okay, maybe that's it. Tesla's down big. Okay, that's it. All of a sudden you have utilities, materials, and others stepping up and following through to the upside. So even on a day when it appears like we're going to start to get some confirmation of potential downside, that's overtaken by plenty of strength across the board. We have a great guest today, Dave Landry, joining us from DaveLandry.com to give us his take, give us some ideas, and also look at cryptocurrencies, which will actually be a nice switch of perspective, I think. Tomorrow we have Mark Young joining us from WallStreetSentiment.com, a big sentiment day with AAII rankings and others coming out. Next week, we're going to take Monday off for Labor Day. Hope you have a good long weekend and refresh and get ready for another week of all this starting next Tuesday. On September 9th, my guest is Fred Meissner, joining us from the Fred Report in Atlanta. As a reminder, on September 22nd, our next big event is coming up called Introducing StockCharts ACP. We're going to have a fantastic time unveiling this new charting platform as part of StockCharts. All the tools you have been using on StockCharts.com will continue to be there, continue to be supported and improved upon, but this represents a whole new set of capabilities, allows us to design much more fluid, dynamic, flexible charts, including a plugin from Dave Landry, my guest coming up in a little bit. We're actually showing some of his charts using his ACP plugin. So a really cool event. We're going to have a lot of guest speakers and some really fun discussions coming up on September 22nd. Let's get to our market recap. So as I mentioned, when I think about this market, it's all about a rally in the S&P, and it's all about the confirmation that doesn't seem to come from breadth and other measures. However, as I have mentioned from the very beginning, I think of the market in three dimensions: price, then breadth, then sentiment. And price is number one. So the trend and identifying the trend and following the trend is your main goal as an analyst, as a strategist, as a trader, as an investor. I firmly believe your main goal should be to identify the momentum, identify the trend. And there is no denying that the trend is positive in stocks. We see more follow through with that today, with the S&P up 1.5%, closing just above 3580. Mid caps, small caps, all up today. So we had this situation over the last couple of weeks where we really haven't had that confirmation. We've had mega caps up, other things down. Today it was sort of everything Rising tide lifts all boats. We all sort of rose. And the NASDAQ 100, while up, did actually not lead today. Technology was second from the bottom in terms of sector leadership. Still up, but not nearly as much as the broader S&P. The VIX was higher, and again, just a quick comment on that. I think a lot of people love to oversimplify, and I would encourage you to not think so much. Anytime you hear yourself saying, "Well, stocks are doing X, so this other thing should be doing Y," you're oversimplifying. Remember that these things are all related, but not 100% connected, right? So just because stocks are up does not mean volatility should be down, which is sort of the conventional wisdom, right? Stocks and the VIX in general have an inverse relationship, meaning when stocks are up, VIX is down. When VIX is up, stocks are down. That over the long term has tended to be what's happened, but there will be plenty of days where those will move together. So I think some people, especially now that you can trade the VIX directly, think it's an inverse trade on stocks. It's not the case. You're actually betting on volatility on options related in a roundabout way to the S&P, but not 100% directly related. Let's look at some other assets, and we'll dig a little deeper into themes. This weaker dollar, a little bit of a respite from that with the UUP back above 25, up 1/3%. Bonds up as well. They actually finished more toward the highs of the day, and 10-year yields down today. The only area of weakness that I'm seeing looking across broad assets is in commodities, and really the metals, gold and silver finishing weaker pretty much across the board. And we've talked about the long-term trend in gold and silver. I still think that trend is very much in play, but certainly taking a breather today. Let's look at a chart of the S&P 500, and we'll fill in some of the blanks as we go. So when I look at a chart of the S&P, as we've talked about, we're really in, pun intended, in uncharted territory. We've always talked about looking at the final bar, looking at the most recent bar, and then looking to the left, using that as a way to see where we're at relative to key support and resistance levels. And for a lot of stocks, we're going to talk about industrials a little later. When you think about airlines, when you think about shipping stocks, you think about some different ones. You're within this range from the early 2020 high to the low that we set probably in March, and we're sort of in that middle ground, right? Financials are a great example of that as well. With the S&P, with a lot of technology, with a lot of consumer names, we've now broken to new highs. And so I think at this point, you really fall into you really need to think like a trend follower. If it's not your normal approach, we need to be riding this sort of trend higher until proven otherwise. Now, again, we've had plenty of potential indications that the uptrend was over. In general, when the market becomes overbought like we see now, you'd expect at the very least a bit of a pullback. Today's up move and a really significant follow through on the S&P puts the RSI in extreme overbought territory, and that does not happen often on the broad market. But when it does, the general thinking is this: extremely overbought means the trend has been positive and it's been strong. That is absolutely the case. You'd expect a bit of a pullback at some point to sort of digest these, this vertical move. But because it's become extremely overbought, I'd assume at least one more push higher after any sort of pullback. So it's sort of, if anything, it's the beginning of a topping process. And I wouldn't see anything technically that says the top is today. That's something you confirm later when you get a lower high. When you get a higher high on lower momentum, you get the divergences. The signal that up top is in place kind of comes later. This overbought condition, especially the extremely overbought condition, basically recognizes the fact that the trend has been strong, the trend has been positive, and it's firing on all cylinders, and that certainly is what it's seeming. If and when we do get a pullback, which I'm told based on a deep analysis of market history is going to come at some point, but not today. If and when we do pull back, the levels I'm looking at, I need to update these because we've been in such an uptrend. I haven't updated these support levels in a while. 3350 would be that next one, that and 3400. 3400 because that was the resistance we broke through. That was a significant level, and often resistance will become support. 3350 because that was the pullback. That was the floor of the most recent corrective pattern. Once we hit 3,400, we pull back to there before the next leg higher. Below there, you're getting down to like 3,200, which feels like a long way from here, and it certainly is. That's a pretty good significant pullback from where we're at the moment. Let's look elsewhere at what happened today, and then as I mentioned, we're going to do a deep dive in industrials today because we regularly do a sector deep dive. We haven't talked about industrials yet, I don't think, using this segment. And what we're going to do is focus on some of the strength and weaknesses within industrials. But looking overall, utilities were number one today. The XLU has been an underperforming sector on a relative basis. Today was certainly a change of that. And while the long-term relative performance still relatively weak, it's worth noting if you see a pattern of a sector like utilities outperforming, it's something to be recognizing. This outperformance of the utility sector, almost doubling the returns of the S&P today, is this little rounding error of an uptick within a long-term relative underperformance. So in terms of looking at what we see today, utilities were up big. That's great. Utilities are back above their 200-day moving average. That's good. However, the relative performance over the long term has been difficult. We still have significant resistance on the XLU around $62 a share, and I'd want to see us break above that to really feel good about the longer term prospects on utilities. As it is, though, it's worth noting that a more of an income-oriented sector, number one, followed by materials, followed by real estate. So the leadership today was a little different than the leadership we've seen in a while. Interesting also to see technology and consumer discretionary both underperforming the S&P today on an up day for stocks. A lot of other movements. Also, just want to finish off our recap by pointing out Tesla now has had two significant down days. I jokingly said yesterday, at some point Tesla is going to go down. We saw that yesterday. We sort of finished and continued offers. So Tesla had been overbought, had been extremely overbought. Now back below that overbought region, suggesting we're in short-term pullback mode for sure. With a stock like this that's been a high-flying name, I think you assume that the trend is positive until proven otherwise, which means you need to see lower highs and lower lows, and we have not seen that yet for Tesla. We're going to take a quick commercial break. Back with my guest, Dave Landry. We'll see you in a minute. Hello, everyone. Welcome back to the show. This is Dave Keller here at StockCharts.com. I want to thank you for watching the Final Bar every weekday after the close. As a reminder, we love to hear from you, especially your questions on the markets, on particular tickers, particular charts, indicators, whatever you're looking at. We'd love to address them in our next mailbag segment. So shoot us an email, thefinalbar@StockCharts.com, or tag us on Twitter @FinalBarSCTV. We'd love to hear from you. Love to answer one of your questions on the air soon. Want to welcome on my guest, Dave Landry from DaveLandry.com. Dave, I think people hopefully by now are familiar with you and your work because it's been so good to see you become more and more of a focus on StockCharts TV, and I'm very thankful to have you on the show here today. Thanks for joining us.
Oh, I'm grateful to be here and love your show. Big fan, and then obviously big fan of StockCharts. So thank you so much, and I'm glad to be here.
Appreciate it, Dave. So you sent some charts ahead of time. Obviously, we're dealing with this market environment with stocks that just continue to go higher. We see all these, uptrends that just are persisting. Where you've sent us two charts, one a stock, but then the second one a cryptocurrency, which is actually interesting to think about how that relates to what we've seen stock-wise. So I'll kick it over to you. Where do you want to start?
Yeah, we'll take a look at this chain link to the US dollar. And what I wanted to do when I was asked to submit a couple of charts, it's like, okay, well, I'm a stock guy mostly, but I will trade any market. And I think that technical analysis is technical analysis, and markets trade on emotions. It's kind of interesting. My brother-in-law was down a couple of weekends ago, and for the last 20-something years, every time we have a family gathering, he tries to talk about earnings of his company and why the stock should do good and all these other things. And I keep saying, there's a skit, Donnie Think Vacuum, which if you Google it on YouTube, it's funny as heck. And, it's kind of like, Donnie Think technical analysis, Donnie Think emotions. And he had a brief stint at day trading a few weeks back. And he's like, I get it now. Markets trade on emotions. So I wanted to show my patterns in a different market. And I figured crypto would be a good way. And if you look at this chart here, it's I'm currently long this right now. I got long as it began to rally out of that pullback. But notice that it pulled back to the 30-day EMA. It didn't quite touch it until now, but if you go back a few bars, you can see it pulled back to 30-day EMA. And it had a lot of Landry light, and that's the plug-in at the bottom of the screen, and that does not measure magnitude, it measures the number of days. So it had about 30 days before it began to pull back to its 30-day EMA. In fact, I was unaware of this crypto. Normally I'm trading Bitcoin and Litecoin and Ethereum, and one of my clients pointed this one out recently, and I'm all over it now, but I wish I'd have seen it back in July. I noticed how it had the nice Landry light, and then notice how that green bar goes down to 0 where it intersects the moving average. And by the way, just real quick, I view indicators as illustrators. They don't actually indicate anything, but they help you to see or illustrate what's actually already in the chart. And I think this Landry light, which I've been really enjoying using through this new ACP platform, has been great. And it's something that can be quantified, and maybe I'll get with Grayson and see if he can write some scans for us on it. But anyway, notice the prior pullback in July, same sort of action again. And then I am currently long this particular market based on that pattern. And part of the reason that the cryptos have been going higher, if I had to guess, is because the dollar obviously has been going lower, and that's been in a pretty serious downtrend today, notwithstanding obviously a little bit of a bounce there.
Absolutely right, and it's interesting. So Landry Light, I enjoyed using it as well, and I love. I've always thought about how far stocks are from their moving averages, but you're focusing more on the time component, and it's easy to spot when something has been in an uptrend and is pulled back to arguably sort of a viable level, and you're seeing it with the crypto here. Chart number 2 was a stock, CLSK, Clean Spark, which I don't know if it is a name that some may be unfamiliar with, but it's actually a surprisingly similar pattern to Chainlink.
Yeah, very similar pattern there. Now this, right now we're in a market where momentum is kind of whack, and it's kind of interesting. It seems like momentum disappeared a little bit. Just my portfolios got really whacked a few days ago, and usually when that happens, it could be the sign of something a little bit bigger to come. But then over the last day or two, it's like momentum is back in force. And years ago, I probably wouldn't trade such a crazy stock like this, because the historical volatility, which is also part of the ACP package you can plot on here, and I don't remember exactly what it is. It's probably like 140 or 150. And usually I would never trade a stock with that kind of HV unless it was like uranium or something that trades really crazy. But lately, this is what the market has offered us. And I don't know if it's all the Robinhood traders or the stay-at-home people jumping into the market or what. But a lot of these crazy stocks have gone up 300-400% and then turn around and a little bit of a pullback and then going straight back up again. So this is not for the faint of heart. But if this got up to, believe it or not, is maybe around 12, or at least take out that recent bar in here, yesterday's bar, I would look to get long. But notice the same sort of pattern in effect. It rallied up nicely for a long time, lots of Landry light, and then the Landry light goes to 0 when it intersects the moving average. So it's a very kind of a cool graphical representation of a pullback, and I think that helps people wrap their head around it. And you know, one thing, I know you do a lot of work where you're looking for a market that's overbought and due to corrected things like that. Well, you can use Landry light for something like that too. It's like the overall market, especially like on a weekly basis, if you get up to like 100 or so, it's usually due to correct after that. But as a trend follower, I'm not going to exit a market while it's going up. I'm just going to have a stop in place, and if I get stopped out, I get stopped out.
Those are 2 great charts and a great example of the Landry light as part of your plugin, Dave. Thank you so much for joining us on the show. Appreciate you being here, and I'm so glad that you stayed safe through all the challenges down in the New Orleans area with the weather and everything recently. But thanks for coming on the show, Dave.
Thank you, David. I appreciate it.
That's Dave Landry from davelandry.com. As he mentioned, he's using the new ACP. We have our special coming up later in the month of September, introducing StockCharts ACP. Dave's is a free plugin. You can go to stockcharts.com/ACP, click on the little plug icon in the lower right corner, click on Dave's plugin. Again, it's a free plugin add-on to your StockCharts service. I want to get into our next segment called Sector Deep Dive, where we occasionally like to look a little more closely at one particular sector. And we've looked at a number of these over time. This time we're looking at what I think is a new one for the segment, looking at the industrials industrial sector. I did want to start though very quickly before we got to that though. I meant to mention this earlier. Coming off of Dave's interview, we actually surveyed many of you with our polling system what technical indicator you use the most. And over 50% of you said moving averages. I gave you a couple choices: moving averages, RSI, MACD or PPO, which are very, very similar, sort of bucketed them together, or other something else. And over half of you said moving averages. Next to that is sort of a tie between RSI and MACD, and then other. So of course, that is a very biased question I came up with, because those are the three indicators that I use the most besides price. So that is a self-selection, a biased question, if you will, but I did give you the option for others, so I guess that's fair. But to be honest with you, I think that's about right in terms of, what I've seen from my time working at places like Bloomberg and working with institutional investors and seeing what indicators that they use. That's about right. That's how most people would respond to that. And moving averages, certainly the most commonly referred to. If you think about Dave's indicator, Landry Light, it's based off of exponential moving averages. He tends to use the 30 period EMA as the basis for that. A lot of the StockCharts contributors I've gotten to know over the years use exponential moving averages as well, and I've gotten into extended, sometimes heated debates with our founder Chip Anderson about simple versus exponential moving averages, the benefits or the limitations of both of them. But I think the benefit of smoothing out price action cannot be overstated, and I'd encourage you, if you don't use moving averages as a way to make sense and try to skip out of the noise, especially with volatile names, it can be very, very helpful. Having said that, let's look at some of the industrials groups, and let's think about how the moving averages might help us make sense of where these things are coming from and what stocks are in what phases. What we're going to use for this is the industry summary page. So if you go to charts and tools at the top, you'll see an option for industry summary. It's a great way to look at a particular sector and look at the industries that make up that sector and try to understand what's driving the performance there. Now, industrials are one that had sort of been off a lot of people's radars, but they're sort of coming back in a pretty big way, and different parts of them are doing well. When I think of industrials, I usually go to heavy machinery stocks like industrial machinery, industrial suppliers. I go to transportation, things like trucking, delivery services, which would be FedEx and UPS. And then also you have to remember that aerospace and defense, things like Boeing are in there. Also airlines are in there. So this would be all the airlines, Ryanair, Alaska, the traditional major US airlines as well. Let's look through a couple of these and just focus on them. So if you click on one of the groups, I have it sorted by scooter ranking. So I'm looking at strongest to weakest according to that pretty simplistic view of trend. We're going to start with delivery services. This is FedEx and UPS. It comes to mind, I was actually jotted down as I was preparing for this segment, I might come up with a basket of stocks called the Uniteds and use UPS, use United Airlines. We'll see what else I can come up with as part of that group of Uniteds. It reminds me of one of my mentors or predecessors at Fidelity. It was a guy, Bill Doan, who ran the group in the 70s and 80s. They used to follow a basket of stocks called the Generals, General Electric, General Motors, General Re, and there were a couple others that were part of that. Now, those were big, sort of the mega cap stocks of the day. I don't know if we could get that looking at the Uniteds, but it's a catchy name. I might go with that. Well, let's look at a couple of these. So FedEx is the first one, and FedEx and UPS. There's a lot to be said for the performance of these. Are a good measure of overall the economic conditions. Traditionally, Charles Dow, 100 plus years ago, looked at the Dow Industrials and the Dow Railroads are sort of the producers of goods and the distributors of goods. If you think about it, FedEx, UPS, and arguably Amazon, right, are sort of the biggest deliverers, biggest distributors of goods at this point. So when FedEx is doing well, when UPS is doing well, that tells you a lot of people are buying things, a lot of things, people are getting things shipped. That tends to be a good sign of overall retail conditions, much better than looking at a brick and mortar store at this point. If you look, FedEx actually became extremely overbought back here on August 10th, and it's remained extremely overbought this entire time, which I have to tell you is extremely unusual. But overbought means up a lot. As we've talked about, it first became overbought really back here in June, pulled back, and then since then, the RSI has not dipped below 60 that entire period. It shows you the strength of this trend and the consistency of the trend, and look at the relative performance. Since that June peak, which is right about here, FedEx had been down relative to the S&P since last fall, now back and has outperformed over the last year over 17%. So FedEx and UPS in strong upward trends. When I think about bull market topping signals and what might tell you that there's a change in configuration from what has gotten us here, the charts of FedEx and UPS might actually be helpful to do that. So that's delivery services, which is the top ranked group. The next group I want to look at is industrial suppliers. You can see from the industry summary, this is fourth on the list of about 15 to 20 industry groups within the sector. These might be some names you may be less familiar with. A lot of people are more familiar with consumer names and technology and other things, other products you may use. These are ones that are, supplying some of those companies, to oversimplify. So tickers you may not be as familiar with, but charts you certainly should be familiar with. We're going to look at two of those, Fastenal and then W.W. Grainger. These are two in pretty good uptrends. These are two of the large cap names representing that industry group, industrial suppliers. Here's Fastenal, F-A-S-T, and you can see that just recently it sort of leveled out here in the first week in August, just below 40, or just about $48 a share, sort of stabilized there. You can see the relative performance sort of taking a bit of a breather, still back a little bit on a relative basis, but now making another new 52-week high this week, teasing $50 a share. We often talk about or think about big round numbers, and if this is able to eclipse 50, I think that certainly clears the way to much further upside. So FAST is one of these. W. Grainger would be the second one, ticker GWW. Sort of a similar pattern, again, on a relative basis. If you look since the February market peak, it's outperformed pretty consistently, which is actually very nice to see. But it's made new 52-week highs, has eclipsed its January high, pulled back there in mid-August, but now once again has resumed to the upside. What jumps off the screen at me is we're not using a candle chart, but if we did, these would all be positive candles, clear candles, or open candles, right? Look at the number of days that GWW has closed higher than the open. It just represents continued upside with an RSI above 70. So both of those overbought, but overall in decent shape. We want to finish with airlines, and unfortunately we're out of time here. Boy, I always want to dig in so much deeper to some of these. And I would just point out that within airlines as a group, it's not my favorite because it's been such a struggle on a relative basis. You look at the relative performance on airlines as a whole. Look at the Jets ETF, for example. It's not great. But there are charts like Allegiant, which are starting to emerge. Allegiant found resistance at its 200-day, broke above its 200-day, now retested it yesterday and turning back up over 3% today. The real key for me is if it's able to break above 140, which would finally push it above the high from June. So just like a lot of financial stocks, the airlines are sort of earlier on in their trend. They're not testing their 2020 high yet. They're still trying to get above the June high, but arguably starting to improve a little bit, coming out of an overbought condition, but now rotating back in a position of strength. The relative strength just starting to turn a little more positive. So maybe some interesting place to look at some of the airlines, stronger airlines coming out of eclipsing resistance there. That is as deep of a dive as I can do on this show, looking at airlines. A lot more to dig into there using the industry summary functionality. We need to wrap the show, go to the 3 and 3 charts in 3 minutes. Here we go. We're going to start with the put call ratio, a bit of a sentiment nod here. We talked about price and we talked about breadth. The third piece of my macro perspective is looking at breadth. And I just want to point out some breadth measures that are just, again, sort of the traditional topping patterns. The put call ratio, I'm looking at the total put call ratio right now. So it's equities and others as well, using the CBOE data. And as you can see, the put call ratio really at extreme lows. I'm looking at a 5-bar moving average of that, a 5-day moving average, and that's really the lowest it's been for 5+ years. This is as the S&P is going to new highs. So from a pure sentiment perspective, certainly recognizes the extreme in sentiment. Chart number 2 is looking at the name exposure index. This is active investment managers and how overweight or underweight they are in equities. They're 106% in equity exposure, meaning they are long in a big way, really the longest that they've been in terms of overall positioning since December of 2018. If you know your market history, this is just before that last gas pyre and a big, sort of the first big pullback you saw in the last couple of years, sort of the beginning of a number of increasingly more painful pullbacks. So for what it's worth, investment managers long in a big way. And finally, Apple confirming the bearish engulfing pattern down 2%. This is coming out of an extremely overbought reading, which playbook would be a brief pullback, maybe one more move higher, but overall more distributed and positive. So certainly a chart to watch. That's our show for today. Thank you for watching the Final Bar. I want to thank Dave Landry for joining us from New Orleans, sharing his take on a couple charts as well. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.